Good morning, one and all. I hope you are doing well. So, this morning I just have the one pair on watch, and that is dollar yen. The market across the board looking like it needs to develop. Certain pairs look like they're developing middle sections, which I don't want to be trapped into, and certain pairs are dollar related pairs, which are flying in the face of what the DXY, the dollar index, is showing me at the minute, which would make them higher risk positions. So I'm dollar yen, just to touch on it before I forget, in light of what I've just said, dollar yen kind of, we say within the Falcon community, dollar yen has a mind of its own. Okay. So dollar yen can do the complete opposite of what the dollar index is suggesting, because it just seems to move independently of the DXY. So that's another reason why I've got this on watch. But dollar yen, so we touched on this yesterday. I believe I had it on watch yesterday. So I touched on the fact that overall, we do have to remember that in terms of this move from here to here, we have retraced 80 to 90, 85% of that, give or take. Okay. So in the long term, it's likely that we will come back up to take out this high, that this high ever to some extent near missed too. Okay. However, we can't deny that we also have this very bearish weekly close there. We had a dropout out of all of this. So we had this I tried this word yesterday. I'm not going to butcher it again. We had this corrective price action on the way down, and then we dropped out of that. And in terms of this move, so here to here, we have retraced about 85, 75, 80% of that. Okay, so it's highly likely that even if we do come up to take out this high, which this high near miss two, it looks to me like we're dropping down towards this low, for example, before potentially taking out that high to complete that kind of structure. Okay, that 1, 2, 3 there. Potentially, we don't need to know what's going to happen next to make money. We just have to have a strong idea based on confluence factors of what price is likely to do in terms of being able to get our risk off of the table. So as I drill down, we can see we have price just seems to be correcting. So we have this impulse correction, potential continuation to push lower. Notice that my target arrow is here. That's partly because of this kind of atypical sequence. I'm not looking to hold this all the way down to here, because I can envisage, because of this corrective sequence, that this could get quite corrective and quite choppy. And in fact, we could even get we could break below here, for example, and then move up. And then we would have that kind of parallel structure. So price can do quite a lot of things, but just not looking to be greedy, just like looking to play the range of this small consolidation there, as it were, regardless of whether price finds its way down to here or not. Okay, so if we just drill down, I mentioned yesterday how you can separate these structures. So we have this structure here. Okay, price goes into a bit of an ending structure where we get the little structure at the end of all of this. We drop out. You can see a tiny little footprint there, little consolidation there. We tap into it, move to the downside. We leave a tiny little footprint there, the corrective candle. We tap into it by way of this 1, 2, 3 touch structure. Price moves to the downside, scoops back up, leaves a bit of a footprint. I think we ever so slightly near missed that. We don't always tap it perfectly, but we have that structure there. We come back up. I'm sure as we drill down, there would have been. Is there a little bit of consolidation there? No, but overall we still have the impulse correction continuation, tight consolidation there, drop out. We then have this correction. We retest the back end of that, stop out the orders that were just above the low, come back down, footprint, take out the orders that were just above the high. And then yesterday, if we just get rid of all of that now that I've been busy squiggling on my charts. Yesterday I've evolved my trend lines. Previously, you remember that I may have had them plotted on like that. Okay. And I said to you that I was waiting specifically for a break above. And one of the reasons that I was waiting for a break above is because this price action here. So this 123 here was giving me a clue that we would likely break above before moving to the downside. Okay, and the clue for me was the fact that it was in this move itself. Okay, so if we when we have a correction here which doesn't form normally when we're going to complete at a high, so I had my ray line there. Normally when we have that, this correction would be more sort of within halfway within the range, so from here to here. Okay, when it forms higher up like that, I mean it's not significantly higher up, but it is higher up than the middle of the range. That is a clue that we're going to ever so slightly break above, and we only ever so slightly wicked above. Okay, now the reason that's one of the reasons that's a clue is because price will usually complete its moves. Okay, so it will complete an impulse correction continuation, and what I mean by that is that the continuation, so the third wave of that, usually is of a similar length to the first one. Okay, which would mean that this was a 1, 2, 3 that lines up about there, and we also know that the volume that's been generated can cause price to break a little bit higher. So we measure it from the break of the correction as well. That would take us up. First target would be there. Second target, measuring it on the break of this, would be up here. Okay, so I'm not surprised that even though we got we got a correction here, so you could have potentially taken that. If you look at how prices pulled back, price pulled back very sharply, and when price pulls back very sharply like that, it's often an indication that there's still the reason that it's pulled back sharply is because there's often orders up here dragging price up. Okay, and what I was looking for, when I saw this, and then I saw this correction that subsequently followed, that gives me a clue that this is likely just a middle section. Okay, so it looks likely to me that we may be I wonder where that gone. My brush has moved for some reason. I don't know why it's over there. Okay, so this is starting to look to me. Of course, we're getting some momentum coming in now, but I had this on watch just in case we popped up like that. Already, it looks like it's been invalidated for the rest of the day. But regardless, what we may do is pop down here to give us this middle section. I also had that in my thinking as well to push back up, and even the volume that's been generated within this middle section is also indicating that we may pop a little bit higher. Okay, because what we do is we measure the middle section there, and then we measure it from the break. That actually lines up there, but just looking at this volume, I could easily see that giving price the legs to pop higher if it does push back up. Okay, so with that in mind, what I'm going to be looking for today, and just looking at how price is currently selling off, that is giving me a clue that even if this does shape up, it won't shape up until likely tomorrow. So what I'm going to be looking for, if I just unhide the forecast and get that back on the charts, I'm going to be looking for, just because we've got multiple inflection points sat above which price could gravitate towards, okay, which makes a risk entry from like a rejection from the top of the structure slightly more risky. What I'm going to be looking for is the following. So I'm just going to put the trend line back on the chart where I had it. I'm going to be looking for price to break above. Now, in yesterday's video, I said specifically that I was waiting for a push down from that area. And I said that I was waiting for a break above, and that was specifically because of how this correction had formed. But if we got the move up from here now, I would be satisfied that, we don't necessarily need to break above, but I still won't be looking for a risk entry from the edge of structure just because of these inflection points. But I'm now going to be looking for a tap into the area and a 5-minute consolidation. And you might be thinking, well, yesterday you said a 15-minute. Well, one of the reasons is, and the only time that I will consider a 5-minute is if we do actually break above, let's say we tap into that high and then we move to the downside from there, I'm satisfied that if we've tapped into that and broken above that and broken back below here, I'm satisfied that we've washed out enough liquidity for a 5-minute correction. So a correction which is visible on the 5-minute chart, 6 to 8 corrective 5-minute candles, to be sufficient for a move to the downside to occur. Okay. And just to touch on it, there was another little thing that I wanted to touch on before I forget. There was also so we had this structure here. Okay. We also have this little footprint there, which I literally didn't notice previously, which we gapped to. So we had a gap to that. So that was the footprint that was left after this structure had completed. And if you look, we actually only wicked to that. So I wasn't paying attention to that yesterday, but we only wicked to that. So that's another indication why we might come up and give us that mechanical structure, psychological structure which we look for. Okay, just something to note there. So that might be another reason why we gravitate back towards there, because maybe a little bit of volume sat there, and these gaps are the indication that that might be the case. So if we do break above and tap into that high and move to the downside and break below here, then I will be sufficient that I will be satisfied that a 5-minute consolidation here will be sufficient. If we literally only just tap this area and move to the downside, then I'll be looking for a 15-minute correction, as I was previously, just in case we get tagged in, tagged out by a 5-minute correction. Then we tap into that, and then price drops from there. Okay, so that is my entry requirements. Just trying to clarify that, and then we would have about 3% to work with to the low, depending on the size of the stop loss, size of the structure, rather, sorry. And then we would have 6% to that low there. And I would do what I always do, what I often do, is measure it from the range. The 90% area is where price will often pull back 50% of the range, even if it's going to, about 50%, even if it's going to keep going. We would still have about 5% to work with to that low. So hopefully the thought process makes sense. And that is it, folks. That's all I'm going to be looking for. And if this takes a little bit longer to shape up, then so be it. But this is definitely giving me a indication now, excuse me, that this is a middle section shaping up. It definitely has that kind of feel to it there. These are kind of these fractal patterns that we look for. So I wouldn't be surprised if we get that to complete that. And then we have that structure. Okay, so these psychological patterns can be seen everywhere on the charts, and that is a good this is a good example of that, or appears to be at the minute. So thanks for watching, folks, and I'll see you again in the next video.